Good morning, everybody. Happy Friday to you. Wanted to start on time, as always, but had a few chart tweaks to work out to get a show prepared for you today. Hope everybody's doing all right. Crazy days. Hope everybody told their family they love them. Parents, siblings, kids. I appreciate doing these streams with you guys, and everybody that comes on my stream is pretty respectful most of the time, and it's really nice doing these poems with you guys. So maybe we'll do a daily poem. You guys are much more creative, actually, than me on this. No, actually, you're just much more creative than me. I was in AP English in high school, but can't really think of too many poems that I, really cherished or helped me through things. But it's important to talk about that stuff. Get some support from each other. Good morning, Sandra. Guten Morgen. Thank you for your poem yesterday. It's very nice. So, yeah, maybe I'll have a few more words about the political situation later. I know you guys, no matter where you turn, it's inevitable, but it's not the core of my channel anyway, so just try to keep things positive, focused on the family, focused on, staying sane in these times, and also Bitcoin. So I think I'll get started here. Federal Reserve released numbers for their sort of global financial data, or U.S. system-wide financial data, which does include global actors in the U.S. market, yesterday. And so I have some fresh, hot off the press data for you. Very exciting. I typically don't do this, obviously. I don't really care when they release or not. I just sort of chart the stuff whenever I get around to it. But releasing the data that I need to show the U.S. total money supply through June was just released yesterday. So that gives you an idea of how this goes. Putting this stuff together sometimes 2.5 months, basically, time needs to pass before you can update the prior quarter's data for this particular money supply, United States M3. And a reminder, the United States hasn't published M3 since here, February 2006, right there. They have published most of the data that you need to reconstruct it, at least on a quarterly basis since then, so I'm doing that. But as I've said, this does not include euro dollars, which are a part of broad money, which are offshore dollars, which are dollar-based bank accounts in other countries. So even that is not included, and I wish I could sort of get all that data together for you at the moment, but I just don't have it. Having said all that intro, probably seems much to do about nothing sometimes, right? I mean, money supply always increases. The rare times that it has increased and the system, they have let it increase without, or at least without figuring out all the guarantees that are needed to be made from the big financial players, we have a crisis, okay? Here you can see the money supply was even increasing globally. We still had a crisis. Although look at the base money, they were trying to drop it, which is down here. Right? The United States was not printing money from 2014. on a Federal Reserve level, even though the money supply was increasing in all the different sectors. Started to have a crisis even just before the crazy days of 2020. And then they started to increase the money supply here, the base money supply here, and all through the markets. But then this repo facility, which is the dark blue line that my cursor's on, this is basically a new form of base money they've really gone crazy with in the last 5 years. And this is base money for non-banks like money market funds, hedge funds. It got up to, as you can see there, it's called Fed repos there. In 2022, 2023, it got up to $2.5 trillion. All right. But they have let that go. And most of that goes right back into the repo market. All right. So I'm going to take all of them off, but this. There you go. See? Very uncertain times these days. They put a lot of liquidity. It wasn't only the repo market. It's other people that just wanted to. You're still putting leverage on a U.S. Treasury, but your counterparty is the Federal Reserve. So it's pretty safe, so to speak. Peaked here, and now look what happens. As they've let that liquidity go back into the financial markets, repo market rises. See that? Repo market money supply. And this is a huge money supply. Trillions of dollars are huge in any context. So it went from 3.8 trillion in 2022. Now, the repo market as of June, why isn't it pulling out? Am I zoomed in? June 2025, $7.1 trillion. If things go crazy again, you will see this blue line get bigger, i.e. they're bailing out, again, people that don't want to take risk. So you put this all together. Demand deposits, cash outside banks. This is physical cash. The number's 0 here. Pretty small. All right, you see it's 2.3 trillion. And let's even take off the Federal Reserve stuff just so you can see. This is public-facing money from the United States dollar system. It's 36.8 trillion as of June. It's the total. $36.8 trillion. And it's definitely even bigger than this because I don't have a full picture yet of euro dollar data. Okay, so this is the money supply. Now I want to go back into what I was talking about yesterday, which is the global balance sheet, which includes the money supply and also debt and a lot of things. All right, I changed it up a little bit. I keep tweaking this now. Just telling you guys how we do it. Again, this is to sort of improve on what Jesse Myers was doing. It's not exactly accurate to say that $1 quadrillion of global wealth exists because it's assets versus liabilities. These things are mirroring each other in the financial system. But we got to make a perspective first of where we stand from. Okay, so this is looking at things from the perspective of the real economy because the financial system itself puts a tweak in it. All right, so government debt. And by the way, the sort of the headline institution that does this is right here, Institute for International Finance. You can do news searches for it and find it. Government debt, 115 trillion. Corporate debt, 88 trillion. Household debt, 44 trillion. Financial debt, 71 trillion. I'm slightly different on some of these figures. All right, but what I decided to do was take their figure for financial debt. The rest are coming from the IMF for me. And plus I have a few on my own that I'm cleaning the data with. Of course, everybody knows the U.S. debt and different things. But so let's add this together. 115 plus 88 plus 44 plus 72 is 319. And I forgot to pull up the number, but as of May, they said 324. Okay, so I'm pretty close. I'm a little bit different. It's a little bit different methodology to find it, but they are at 324 global debt. All right. Institute for International Finance. Good morning, RV. Good morning. Hope you're well. As I said at the top of the stream, people coming on, I hope everybody's told their families they love them. And, you know, thanks as well for the poems. We'll keep, I'd like to keep doing this if you guys want. But back to the money supply, back to the interesting stuff. So sorry. I need to take this off. Let's go. Actually, this is total U.S. money supply, 36.8 trillion as of June, which is last period's data. Now, this is global. Okay, you remember yesterday and the day before when I just created this data set, I had the money supply here because it's true that the money supply is always a liability from the financial system's perspective. Deposits, repurchase agreements, money market funds, anybody who is using that liquidity to do stuff, or I should say anybody that's issuing that liquidity is taking on a liability. So that's what banks do. When they issue deposits, they take on a liability. As you remember, the global money supply is way higher than this financial debt. Here's the financial debt of 70 trillion. So I think this is a better way to look at it. It's, again, none of these numbers are going to be perfect, but it's pretty good. It's pretty good. Like I said, I'm only 5 trillion off from the Institute of International Finance total. But these are the main sectors of everybody's debt. All right, corporate, financial, household, government, worldwide. Then you have the stock market, because it's a liabilities plus equity thing. Stock markets, huge liquid markets, $130 trillion according to the World Federation of Exchanges. All right, so in total, this is going to get us something like 430 trillion, I believe. What is the number? 446 trillion is my number. Okay, so a little bit less than 500 trillion. I was doing a little bit different yesterday, but I'll show you. So 446 trillion. This is liabilities plus equity worldwide. Okay. Now, what I wanted to do is I decided to put the money supply on the asset side. Okay, it's going to be a line here now. Global money supply. This includes M0, M1, M2, M3. You got to count M3. You see that big bump there from the crazy days. 168 trillion, which is actually higher than I thought it would be when I was first calculating this. This is using IMF data plus my own data. IMF does not use broad money for the U.S. Nobody publishes M3 anymore. You got it backwards. You got to go back in time and calculate it yourself. So we also have silver, we have gold, Bitcoin, but I want to focus on the financial system as it stands currently now. So let's take off silver, gold, Bitcoin, public equity markets, household debt, corporate debt, government debt. Okay, so this is where it gets a little bit weird. Money is a sui generis thing. Okay, it's unique. It's a good that's unique. You can sort of you can issue it, you can lend it, you can borrow against it. It's a sui generis good. It's unique. Unfortunately, the financial system has a monopoly on it. Right? For good or for ill, that's what happens. You remember here, all right, where I had to do some things in positive and some things in negative. The reason is because it's an asset and liabilities thing again. Okay, so I don't want to lecture too much, but I'll try to get through this quickly. The 37 trillion, which is everything that's positive on this chart, is liabilities of the financial system, and they can be, very hot liquid liabilities like number 7, repurchase agreements, which are like hedge funds going crazy, levering up U.S. treasuries. Or it could be mundane things like number 2, which are savings deposits, or number 1, which are demand deposits, which the Federal Reserve says there's no difference now. So they changed the calculation of the supply. So they made it harder on me to do a backwards compatible supply. But anyway, you have it here. They're all liabilities for the banking system. They're assets for us. So we do use them as money. Okay, so from our perspective, these are assets. All right, but from the bank's perspective, they are liabilities. It's a weird liability, but it is a liability for the bank. And then from the bank's perspective, what is their asset? Well, it's what they hold at the central bank. So that's this stuff down below. So this can show us sort of the leverage of the system. Not sort of, this is the leverage of the system monetarily. And I want to hold off on calculating it for a second. Good morning, Gio. I said it again. I'll say it again. Tell your family you love them. I've been doing it. And thank you guys for the poem. I want to keep for the poems. I want to keep continuing this. So this is how we got to sort of figure out what's going on with the money supply, and also essentially what Bitcoin is up against. And because I do believe in the near term, although it's hard to predict the long term, but I do believe Bitcoin will have many substitutes on top of it, right? Like a Coinbase account, a Kraken account, that is simply a bank account. It's not regulated, but it's a bank account. And exchanges are very cautious these days. They're pretty much run 100% reserves, not all of them. So it's matched 1-to-1. But what if you would, if you'd sort of do the math, it would look like this. Just in the crypto world, you'd have the crypto down below, or the Bitcoin, and you'd have the deposits on the top. That's how it would look like. It's a liability for the exchange is the top, and it's an asset for them. It's the crypto or the Bitcoin that they hold. And obviously, there's a lot of shit coins, and that's how it looks. The traditional financial system is way levered on top of this. Right? Here's actual cash from the government, savings, retail, institutional money market funds, time deposits. Looks like this. So it's just how it looks. It's how the leverage looks. But now I want to, again, continue to show where Bitcoin fits in the whole mix. So just like we had the financial system's liabilities on the top, the financial system's assets on the bottom, here it's actually, it's a little bit weird. It's not exactly reversed, but you would add these two up again to get the financial system's liabilities. So the bottom here is just pure debt. Financial system runs bonds, takes loans on their own balance sheet to, expand their branches or their operations or whatever they do. This is financial system debt, 70 trillion. But they also have this huge other debt liability, which is here, which is 168 trillion. So if you put those two together, you get to something like 250 trillion, 240 trillion. It seems to be this is something close to what the financial system's core liabilities are. But since money is a weird thing, I'm going to put it on the top now because it's actually our asset, right? Like our, your bank account, your Coinbase account, that is your asset. It's your asset. It's Coinbase's liability. Your bank account is your asset. It's Deutsche Bank's liability. So there's a global balance sheet. So it's kind of weird, but for the financial system, this is actually, I think, the best way to show it. Now, what matches, from the perspective of the financial system, what matches their liabilities? Well, it's the other loans that they make, which is in fact debt. So there's government debt, corporate debt, household debt, and probably some equities too, because they loan up on equities, right? So this is the mirror now of the money. When they say money is debt based, it's not incorrect. It's debt based. But it's still our asset. But there's a lot of debt. Let's take off equity markets to not confuse things. There's a lot of debt on the other side of our money. It's actually more debt than money. 300 and some trillion versus 168 trillion in money. And then we can put silver on as an asset with no matching liability, gold as an asset with no matching liability, Bitcoin as an asset with no matching liability. They're all very small, very underutilized so far in the financial markets. And then the remaining would be non-monetary assets, which is 255 trillion. So it's always a work in progress, but this is now, I think, a good global view of how the global balance sheet looks from the perspective of the real economy, or the non-banking system, non-financial service economy, like from the perspective of everybody in the real economy. The banking system is also here, but they're on both sides, weirdly, because money is a weird good. But I think this is actually the best way to show it now. And as you can see, obviously, Bitcoin is a blip on this chart still, as you would expect. 16-year-old asset, about to be a 17-year-old asset. This number's updated through June now, right? $2.1 trillion Bitcoin value. Hello, big berms and jumps. Yeah, the loans that banks issue are indeed the debt. All right, and the financial, it's weird because there's financial debt too. That includes their own debt to increase their operations. So, these are bank assets. Except for the weird thing is financial debt. It doesn't like cancel out or something. It's still debt, but it's just banking system's a weird thing. So there's about 70 trillion in banking debt, like actual loans, bonds that banks themselves issue to run their operations, even though they have the luxury of taking deposits, all right, which fund a lot of their operations. We don't have that luxury. So I had the money supply on the liability side before because it is a liability for banks, but I think I need to do it like the Institute for International Finance, which is here, which is, my numbers are slightly different, but here it is. So 300 trillion, 320 trillion in, they have 324, I have 320, 320 trillion in global debt, all right? Including their own debt. But we could also say, roughly speaking, all of these loans are also sitting on their balance sheet as assets as well. And the biggest liability for banks is actually the money supply. Banks, the financial system, everything else. So this is it's weird. This is a liability for banks that is also our asset. So it's better to put the money supply here. But anyway, I'm just trying to show the buckets of value and where they go. You don't add all these things up together. It's you just don't do that. So anyway, put everything back, as well as the stock market, which is equity. And we have a number that is 400 and, sorry, what's my actual total? Let me check for you. We have a number of total assets is $447 trillion. So it's a lot of money, a lot of value. And then to drill down, the core of all of this, leverage and loan contracts and everything else, the core of that is the monetary base. Whoops, that's not what I want to show. This is what I want to show. Monetary base. All right, here's through July. Estimated. This is total, global, 26 trillion. 9 trillion of this is physical cash. Physical cash. I don't have it broken out here, but physical cash on this sheet is, or on this chart is here. It's in the money supply. But it's just, it's 9 trillion of this number. The rest is deposits, repurchase agreements, time deposits, all the rest. So 9 trillion of this is physical cash. The rest is bank reserves, all right, which is this. Back to the U.S., just to see where you see where it is. It's down here. It's bank asset. It's bank asset. This is the real money printing. When they say money printing, the printing press, it's whatever the central bank prints to buy or sell bonds, government bonds typically from the banks, which creates or destroys money. Creates when they buy, destroys when they sell. All right, here's a regression. 99% R squared. It's a really strong regression. Let me double check for you the slope, because it's, yeah, it's running at 10 now, because it's really been low here. It's 10% in dollar terms. My headline number is closer to 13%. This is in native terms. Don't worry about it for now. But if you just simple run a trend line over the dollar values of all the currency that central banks print, that's a 10% growth rate, this black line, 10% per year. Rare on the downside, rare on the top side. As you can see, we're super rare on the downside, like super, super rare. So I expect, especially with political situation, that this will be even bigger when the Fed really starts to lower rates. This will finally turn around, let's say. But it is low. They really did, cut the money supply by, remember, it's 30 trillion during the crazy days. Now it's down to 26. The trend line is 35 from 1970. Okay, but now let's go back to the broad money supply. I figured I haven't shown trend lines of the broad money supply so often. So again, we don't count the Fed stuff, the Fed assets for the banking system, which is the base money. Just broad money, which is the banking system's liabilities to you and to everybody else, businesses that holds money, right? $37 trillion. Let's look at the slope of this exponentially. There it is. Let's look at the long exponential trend. Okay, so here's, we can see some interesting things. And I wanted to tell you the growth rates. All right. All right, so this grows slower. This is just the United States, not globally. But in dollar terms, and you can certainly see the craziness that happened in '08. This was the financial crisis, was in the broad money, not base money. It went to 16.5 trillion, well over trend, and then fell. It's actually even been really below trend, the 50-year, the long-term trend. This is actually even longer than that. This goes back to 1959. So we're actually off this trend. We'll go to Bitcoin in a second, how good the Bitcoin trend is, but you can go decades with political policy changing, the way that the money supply goes. 7.7% per year is this this black line. The fit is 99% R squared, but it's like directionally great, but I would say, less helpful actually over the last 15 years because we're under it. So I put a shorter trend now. Started from December 2008 as we go down, and then as we go to the future. And this dotted black line is 5.5% per year. So interestingly, contrary to maybe popular opinion, broad money supply in the United States has been growing slower than it has all time. Now let's put some trend lines over this. Let's do the 1 and the 9th. These are very tight bands, you see. I got to take off the long trend. All right. This is the short exponential trend, but after all the years of data, this is how it sort of evolved. All right. So where are we right now? On the short trend, actually pretty rich. This seems weird, but this is how it is. 20th, 30th, 40th, 50th, 60th, 70th, 80th. So we are actually super low, posting in very low. Oh no, sorry. We're above this trend. We're above this trend. Sorry, the trend line is low. We're above this trend. So the trend line itself says we'll be at 34 trillion. We're at 36.8. So from this perspective, we are running hot, hotter than our 5.5% per year growth. So very exciting. I know, not really. But the point that I wanted to show you with this chart is, first of all, log scale, log linear. So this stuff is a straight line. 96% R squared. Here's the trend line since 2008. Here as it's evolved. And yeah, this is just going to keep going at these levels. As great as Bitcoin is, they're still going to keep printing, is my point. Tough days occur when this money supply goes down. Okay? Really tough days when this goes down. This is why they don't let it go down. From the Jackson Hole speech and everything, we were way elevated. Actually, we were hitting the 100th percentile, interestingly, from 2008. And it's fallen a lot, but it's actually still quite elevated. But anyway, I don't really put too much credence into this other than, look, 5.5 to 7.5% per year. This is what the U.S. money supply does. And it grows in exponential scale. So if I would put Bitcoin, and I'll get to some more questions in a second, if I would put Bitcoin on a chart, I don't have the global money supply still, unfortunately, on this, but I do have gold and some other things. Sorry, this is taking a while. I didn't load this one up. Anyway, point is, we actually are running a little bit hot compared to the trend from '08. But it's harder to make decisions on that, right, compared to Bitcoin. Like here we ran pretty low on this curve, right? The actual money supply was in the 10th, 20th percentile, like very, very low. And then back up, and now we're running hot. The point is you're not stopping this trade. I mean, these are very, very strong bands, very close together. This is another thing I wanted to say. Like, these bands are very, very close. I actually don't know if I have bands on the Bitcoin market cap, but I'll show you on the price. Like, you're talking about between the 10th percentile and the 80th percentile, you're talking only $2 trillion, roughly, which is a lot, of course, anyway. But money supply stays in a very, very tight band. So they're going to keep printing. There's no doubt about it. I do have this chart still. So if we go, this is broad money, United States only. This is global base money. Sorry, this is global base money. Running very low, which makes me pretty certain they're going to print more. And if you put Bitcoin together with that, we cross in 2041. So again, look at how fast Bitcoin grows compared to the broader assets. Actually, I need to check this 8.2% CAGR because I just told you it was. Oh, that's the 2008 trend, right? So this is right. So this trend, this black line, which is still a really solid trend, 99% R squared. This is 10% growth since 1969. Probably aggressive, slightly, because, you know, I'm not like adjusting for currencies coming in. I do with my 12.7% number, but here it's like just straight on the raw dollar numbers, raw dollar conversion. So if a currency's added, like there's only half of the currencies are included back here in the 70s. So it's actually slightly artificially inflated by new currencies coming in. But it doesn't matter. You can still see it's been over that trend for a long time. Now it's under the trend for a long time. Still printing. But with Bitcoin, since 2008, measuring the slope of this world-based money, the same trend, the same thing we just looked at, same trend. Right? You can see we're well under trend. I just project out on the trend. From 2008, world-based money is actually even grown slower. It's kind of weird. 8.2% on a CAGR. 8.2%. And so Bitcoin growing at its 42% per year on a power curve will hit there. So again, super bullish information for Bitcoin. There's just nothing else in the world that's growing this fast, this consistent as Bitcoin. And nothing stops this train. But I hasten to add that I still don't see, a major global war, which is not impossible, could maybe reset the financial system or change the growth rates of both of these curves. But these curves are really strong, right? 91% R squared from 2008 for world-based money, 96 an expo curve, power curve at 96% for Bitcoin. They're really strong curves. Maybe it's too many money supplies today, guys. I don't know. Point is, I'll keep tracking it. We're doing just fine. We also got a lot of room to grow into. There's your public-facing money. So the gold market, the gold bugs used to say that gold is the only asset in the world that's not matched by somebody else's liability. First of all, that's not true. The silver market is too. At least silver bullion and silverware that people just keep in their house, even though silver market's super small compared to gold. All right, 1/20th the size. But Bitcoin works the same. So all three of these assets on the bottom of this chart are assets that are not matched by anybody else's liability. But the money supply is an asset for us that we use in society, but it is matched by lots of other liabilities. So that's the point of this chart. Probably, yeah. Yeah. It does allow for increased liquidity in the financial system. Based on the rules. Some of the rules are different, right, in different countries. People kind of know this 10-to-1 fractional reserve banking. That's like if you're a bank and you're making loans, the typical ratio, right, is 10-to-1. That's not prescribed worldwide. So, and plus there can be other assets that you can make more loans on if you have, such as gold. So if you have gold in your coffers, you can make more liabilities. And from the central bank's perspective, they can make more money, which in turn is an asset for the financial system, and they can make more loans on top of that. So they're always going to pyramid more credit and credit and credit. But as we know, being Bitcoiners, all of it is unsustainable because it's an exponential curve. It's going to break at some point, or you'll have big crises, big drops, and dislocations, is the economist's word, dislocations in the economy. I guess to be perfectly pure in the phrasing, at the central bank level, there's actually no borrowing. It is recorded The money that they print is recorded as a liability. This is a better way to answer your question. The money that they print is recorded as a debt, but they didn't borrow it from anybody. They just created it ex nihilo. And so money is a sui generis sort of enterprise. All they have to do is print to buy, right? So the Swiss central bank has printed Swiss francs and bought Facebook stock with those printed Swiss francs. It's just how it works. It sounds insane, but that's how the financial system works. So at the central bank level, RV, it's actually the word is, it's not exactly phrased like that at the central bank level. It's just they print and then they buy. And that's how it works at the central bank level. At the bank level, it's more like I was saying. Banks have a limit of how much they can lend based on whatever reserves they have in whatever proportion of reserves they have on their balance sheet. And those reserves, by the way, are the liabilities of the central bank. So it is what that central bank printed. It's a weird system. A lot of the more bombastic Bitcoin commentators, I'm sure you guys have read plenty of newsletters or tweets like saying that all central banks do is print and all this and that. I'm sympathetic with this view, but again, to me, it kind of seems like a silver bug trying to sell bags of silver. You're directionally correct on all of those things, but it's also, it's a complicated system. The only thing I really don't agree with in the system is that central banks have the monopoly of doing it. If we had banks competing freely, literally issuing money that is taking other people's, and when I say issuing money, I mean like certificates of money. So taking other people's gold, Bitcoin, whatever, loaning those out to create a spread and actually create economic growth, that would work totally well. And then you might ask, well, what happens if everybody starts loaning out too much? We have real world examples of this in a free banking system. It happened in Scotland. If your bank just starts loaning out, issuing a bunch of loans, giving people a lot of loans, taking interest on all these different loans and projects, but you're a competitor bank, and you start to see these checks, or it was just checks back in the day, but you start to see these certificates come into your coffers, and they're really outsized certificates compared to all the other banks. You're going to start to question the soundness of this one bank that's doing this, and so you would call them. This happened to a bank in Ayrshire in Scotland. It's a very famous case in Ayr, 1700s, at times of Adam Smith. And it just failed spectacularly because the other banks simply called on the gold. They said, we don't think you actually have enough gold to really sort of justify the certificates you have floating around. We'd like our gold, please. Here's some of your certificates we got from your customers. Give us the gold. We'd like to settle. And they didn't have the gold, and then they go bankrupt. So this system can work without a central bank. That's my point. And also in some way, it's all a moot sort of argument, because neither you nor I nor anybody is going to go and force the IMF or all the central banks to let all of us do banking independently, set up our own banks, whatever. It's a highly, highly regulated industry. I would say mostly for ill, actually. So we have Bitcoin. So, you know, at the end of the day, some of the more hardcore, bombastic Bitcoiners and Austrians, we all agree on the same thing. It's just this money supply is not going to zero. This is what I'm saying. Like, you can count on it increasing, and I would not, I would not personally bite on too many newsletters that say they know when the next financial crisis is coming along. I've been reading gold and silver newsletters like since here, and it was the end of the world here. This is really the end of the world in 2012 with the Mayan calendar. Anything too spectacular happened in 2012? You do see some ups and downs with the Eurozone crisis, particularly here. But, life goes on. Yes. So Bitcoin was pumping a little bit. Let's put on the old power curve. I do not know the price right now as I put this up. Give me a second. What do I got today? $114,985, just below 115. Here we go. Oldie but goodie chart. Take off the 100, take off the 0. And notice, by the way, how beautiful this looks compared to, say, the United States money supply in exponential. Right? It's not as helpful. Right? You can go a whole decade with sort of not doing what we think it should do. Just keeps putting lower lows, and now it's putting higher highs, and still actually higher highs compared to the all-time trend, except for this and this. Anyway, point is, Bitcoin is a nice, beautiful, sustainable power curve, and every single day that we close above that black line, we make the black line higher, which is great. Keep that in mind. So if we go back to yesterday, what did we close at? We closed at 115,000 on my math, on my UTC close. So that's above the power curve. So we pulled the power curve up a little bit yesterday. We also did it on September 10th, barely. And I think we did not do it for a couple days. On the 9th, we did not. On the 8th, 7th, 6th. From August 28th. So we were down for about 9 or 10 days, just below the trend, and now we're just above. I don't know why people are freaking out. I mean, about the Bitcoin price. I know why people are freaking out about a lot of other stuff, but about the Bitcoin price. Good morning, Winston. Yes, it's it's coming. Yeah, I should probably do that. You ran an exponential trend since end of year 2022. Sminston has done a good one because it is true. It does go on an exponential second. Yeah, he hasn't updated this since August. But this is very close to what you're talking about, I believe. Calls it the crab crawl. So if you look from the bottom, right, and then go to the next top, it can be exponential. In fact, it has been. And we're pretty much... So it's a different way to look at where we could potentially go at the next top. If we stay on this trend, we'll get all the way to 1 million by 2028. Another interesting way to look at it. I don't see that happening. That would seem to break the power law, by the way. Unfortunately, no, Winston. I have to sort of say this every time. Like, literally today, I was half hour late starting because I was revising. All of this stuff is on my local back end. I tweak numbers all the time. I just don't have sort of reference charts on the site, except for a few. So these are the ones you can find at the moment. The main power curve on log. You can see that beautiful straight line on log. And then some tables. This is a really important one, right? Shows you this is the all-time trend. And then if you stopped calculating at every year end, what would the price today be? And you can see how good the power law is predicted. So I just don't have them yet. I just don't. There are some. I plan to add more, but like all this stuff is very sort of one-off, intensive. I just don't have it. And I don't plan on adding. A lot of people ask me about, are you going to do a subscription or this or that? I don't know. Maybe I'm leaving money on the table, but I wouldn't want to like waste time logging in and dealing with some buggy site from some newsletter, which is all that I would be at some point. So I really want to do this value for value to show you guys. If you want me to add, to chart something in particular, let me know anytime. Send me an email. I'll do what I can. Here's another one of his crab crawl. This is still not very current, but the trend would be probably exactly the same. It's here from June. This is from June. This is a cool one. I need to do this, frankly. This is what you're saying, RB. So this is an interesting observation. Here we see the slope exponentially. All right, it does decline every cycle, but it has not declined here. It's kind of interesting. This is through June, like 16th. So he's saying, very helpful chart. He's saying that, based on sort of the way these declines, you would maybe expect the slope to be somewhat like here, be the red line, but that's not what the Bitcoin price has done. Basically from, the bottom plus the ETF, boom. This is through June, so it's going to be very similar. This is an elevated level, which is an argument that we won't have, the same 4-year cycles. So I do need to replicate this. This is very good. right? Because usually we're just sort of we're going at a level from here to here, but then we really spike up in the last few, last few months, really, before the top. Same here, same thing here. So he's doing an exponential on the bottoms of each cycle. Now, I think you could also make the argument that you could still do it on the bottom, like to here, and then put this part in white. This is where you can see it's an art. It's more of an art than a science to figure out the real trends. Hello, David. Yeah, I mean, I'll think about it. I'll think about it. It's just it's a value for value thing. It's more effort even getting them up there and keeping them updated. And if I put it behind a login, I got to sort of manage that login portal, and I don't know. Putting them without a fee is also an option, because then I don't have to manage any sort of hacks or whatever. But people that are interested can still log in, and then you can still contribute. That is a point. Yeah, I haven't looked at this in a while, actually. I think we showed this in June, but this is a good argument that this time is different. But still, I think you can paint this differently, right? Like, it's possible you can, like you can get a higher slope here if you take the yellow all the way to here. I don't know exactly where he's making his cutoffs for his exponential trend lines, but right, like why not cut it off here instead of here? I don't know. It's a nice chart. But it is, there's some art here more than just the math. Yeah. Yeah. I need to get the options and futures running better. Volume, open interest. It's going to show us a lot. Also true. Also true. I mean, this is a generational technology. It's just generational. You can see it in the numbers. You can see it in the money supplies. I mean, we're competing. Sorry. Where the hell is the... Did I move it? No. We're competing with all this. Like, even if you just took money and not all the other debt and equity instruments, just took money, we're competing like this. And I have a hard time actually believing that we'll ever be bigger than this green line. They're all just going to, I mean, they'll all keep growing together, but, by definition, if you have Bitcoin and Coinbase, that means Coinbase created a green line here, entry, and then the Bitcoin that's in Coinbase will be a negative on the other side. It looks something like this again, right? Go back to here. Something like this. Right? And the very fact of probably in the future, people are going to want a little bit more interest, a little less safety. That's what they usually want. So that means a higher green line, a higher derivative of Bitcoin versus the Bitcoin itself. This is just a derivative of dollars. And gold, you can argue, because still central banks hold 4 trillion in gold, but they don't really use it like they used to. It's not counted really as a. It actually is a core reserve asset, but it's only at the central bank level. Is this a ChatGPT quote? Central banking is the big boss, no doubt. Good morning, Jay. Or good afternoon. It's a lot of buckets of value. By the way, if Bitcoin moves exponential, I say this all the time now, if this turns into a straight line, like say this actually changes Bitcoin from moving from a power curve to an exponential curve, like Bitcoin just stays here. That's actually a less promising view for a Bitcoin future in my mind, even though Bitcoiners today will be like super rich. Because the rest of the system moves exponential. So if Bitcoin just mirrors that, then it's not very exciting. Oh, a Breedlove quote, huh? Okay. Yeah. No, we're all on the same page there. I mean, it's nothing better than this asset. Nothing better. Well, they do have the guns. They make the rules. They decree. That's why I keep saying we at least got a while. And they also are crystal clear that if you let it collapse, like Bernanke said this as much to Milton Friedman on his birthday. He's like, because this is what the Federal Reserve was doing in the Great Depression times, is they weren't expanding the money supply enough. So you get this credit crunch, liquidity dries up, equity values go down, and it's a crisis. But they kept printing money, which actually you don't see the money. The global money printing is here. You see it more here. Right? See it? It's above trend. All inside here is QE 1, 2, 3 worldwide. You mean the financial system? But then my question here is, how would we calculate interest? in a power system. Because I don't think anybody's figured that out yet. You can just say we're going to go all equity. But the only way that you can calculate interest forever is this. Straight line on log scale. And Bitcoin doesn't do that. It moves like this. So the effect on the returns are this downward sloping. You guys know I've talked about that for a while, but I'll put it up again just to see. No, they're going to hold on to that as long as they can, unless there's a total collapse in the faith of currency. But again, I'm not going to be the newsletter guy telling you that. You look at these money supplies and tell me that they're not going to keep increasing. Even if there's a crisis. See the different money supplies they actually decreased? Savings deposits. Demand deposits went down. But the Fed absorbed a lot of that liquidity too to keep things safe. And now it's back going up again. So here we go again. Trailing 12-month returns. And I've said this a lot. It's kind of hard to grasp. It's a long time view. Super volatile price back then, but this is the trailing 12-month of the curve. All right, so it used to be, thousands of percent a year return on the power curve. Now we return 43%, 42% per year. By the end of the year, it'll be 42. All right. Still way better the return than any market, as evidenced by this chart. Sorry, where is it? Now I understand this is a dollar-based chart, so of course, if the power curve is correct, it has this sustainable slope, decreasing rates of return. But the idea still holds true if you think about lending Satoshis. Like if Bitcoin has a fixed amount of Bitcoins, how is a growing economy with a growing population going to keep able to lend fixed amount of Satoshis with fixed interest rates that compound? Because that turns into this chart. That turns into, this chart. A straight line on log scale. You just can't do it with a Bitcoin system. Unless you move into all equity contracts. Yeah. I mean, it's going to depend on how much Bitcoin is suppressed as well. I saw one my buddy Marty was not happy with, which again, I'm, just prepare yourself with anything from the Trump administration. Sorry, I'll pull this up. 1 second. Gotta find it. Okay. You guys probably saw this. This would be a terrible move. David Sachs is a terrible person. Scott Bessent seems like a very good person. If Financial privacy isn't a crime, and 99% of people using these tools are law-abiding citizens who simply don't want others to know how much Bitcoin they own and where it is. This puts Americans in harm's way. So all these things are what they want to make illegal, maybe under the Trump admin. Pulling or aggregating cryptocurrency from multiple persons' wallets addresses. This obviously is talking about coin joining. Using programmatic or algorithmic code to coordinate, manage, or manipulate the structure of a transaction. Splitting cryptocurrency for transmitting cryptocurrency. There's a series of independent transactions. All of this is trying to destroy the fungibility of Bitcoin, which has been an issue since day one of Bitcoin. I was on a panel with Peter Todd and Adam Back in Helsinki, and we talked about this. I mean, there is, Satoshi said this himself actually in that early post. It was like one of the first emails he responded to about, how BitTorrent was still surviving, but it wouldn't be the solution to all problems, all political problems. Is that some of this stuff will be political, and you do need political force to get done what needs to be done. I think it's going to take that's be a long battle. But the argument, of course, was the PGP. Is code a weapon? Are you weaponizing? Putting PGP on your shirt and traveling across a border. The cypherpunks actually won a few lawsuits, I think, in the 90s regarding that. Probably, yeah. Stablecoins would be just like this. All of these money supplies. They're just mirroring a debt balance. So again, here's the global. Let's take off everything, but let's take off the equity markets just to not confuse it. Here's total debt, and then here's the money supply. So we're about 2x hypothecated from this calculation. 2 times as much debt as any dollar of currency or deposits or what we would call broad money outstanding. So you could say $1 of the money supply represents $2 of debt. And that's what stablecoins are. I was just going to ask. The Great Dictator. Definitely need that right now. Definitely need that. Thank you. I was just going to ask. I guess I need to look it up, don't I? Because I'm not doing links. Oh, this is long. I don't think you guys want me to read all of it. I know you guys have seen it. I'm just scanning to maybe. It's an important speech. If I recall, tell me, guys, if I'm wrong. This was the first time that he even spoke on camera. Is that right? Because he was started in silent films. Is that correct? Might not be. I can't remember exactly. But I'll skip around. I'm not going to do all this for your. I'm sorry, but I don't want to be an emperor. It's not my business. I don't want to rule or conquer anyone. I should like to help everyone if possible. Jew, Gentile, black man, white. We all want to help one another. Human beings are like that. We want to live by each other's happiness, not by each other's misery. I have comments about this, by the way. We don't want to hate and despise one another. In this world, there is room for everyone. And the good earth is rich, and you can provide for everyone. The way of life can be free and beautiful, but we have lost the way. Talks about greed, talks about technology, talks about the military, talks about the spiritual. Yeah, it was his first film with dialogue. Let's finish this here, because I do like democracy and republicanism, even if that's a bad word in Bitcoin's face. Then in the name of democracy, let us use that power. Let us all unite. Let us fight for a new world, a decent world, that will give men a chance to work, that will give youth a future and old age a security. By the promise of these things, brutes have risen to power, but they lie. Do not fulfill that promise. They never will. Dictators free themselves, but they enslave the people. Now let us fight to fulfill that promise. Let us fight to free the world, to do away with national barriers, to do away with greed, with hate and intolerance. Let us fight for a world of reason, a world where science and progress will lead to all men's happiness. Soldiers, in the name of democracy, let us all unite. I think this is good in light of the reflections we've been doing yesterday as well. I need to make sure this doesn't pop up on the screen because I don't want to show it. I'm going to read it. I'm not going to. It's an image that I don't want to show. But you can search for a tweet by Yulia Davis, who's a very good Russian. She's, I believe, lives in the U.S., Russian speaker, reports all the Russian propaganda. I'll go back to this idea of I already lost it, but there was an idea here that, we want to live by each other's happiness, not by each other's misery. And I really do believe that in the West, we're happy when each other has success, and we're not happy when bombs start dropping and people's lives get destroyed. If you look to authoritarian nations, that's a real linchpin that I do not see them. They're not very friendly to that idea with us. So I'm just going to read this quote because it has a picture of both basically the stabbing of the Ukrainian refugee. I'm sorry, I'm already forgetting her name. Zarutska, I believe. Which happened already this past summer, but the footage was released, and then it has. It shouldn't have been this. This was RT tweeted. It has a still of Charlie Kirk being killed. She writes, Russian state media will exploit these events to the max. They want more violence in the U.S. Beware. And then she quotes, she's showing the tweet that they put out, rt.com. You can find it. It says, the bullet that ended the moderate right, the knife that ended white guilt, this week at the turning point. This is obviously clear agitation for, civil war type rhetoric. I'm sure you guys saw this. Again, I don't want to try to lecture or be political on what happened to both those individuals. Terrible, unrelated, frankly. And they're trying to, these authoritarian regimes are happy when we are fighting. And so if I see, tweets from, and I'm sure you guys saw it, from leftists, from rightists, saying, hard right people saying that this is war, they want war, we'll give them war. I need to ask Ukrainians about that. It's a tragedy. Okay, so I should read the soldiers part. Soldiers, don't give yourselves to brutes, men who despise you, enslave you, who regiment your lives, tell you what to do, what to think, and what to feel, who drill you, diet you, treat you like cattle, use you as cannon fodder. Don't give yourselves to these unnatural men with machine minds and machine hearts. You are not machines. You are not cattle. You are men. You have the love of humanity in your hearts. You do not hate, only the unloved hate, the unloved and the unnatural. Soldiers, don't fight for slavery, fight for liberty. It's hard for me to see. I don't know if you guys have been, I'm sure you have been seeing, it's impossible to not see the hatred on the feed, on the regular news. I want to keep bringing this back to where I am because, whatever. It's my show. I'm speaking. Thank you for watching. But, I just read before this part, I read a tweet by Yulia Davis who's talking about how RT is fanning flames. And it's an image that I don't want to show on the screen, so I'm not going to show the tweet. You can find it. RT tweeted it, Russia Today. Here is a good thread again by a really good Finnish Ukrainian soldier supporter. I just want to read this and then ask the question why we're seeing this right now. Russia's rhetoric toward Finland is getting tougher by the day, and just like they did towards Ukraine, they're questioning the existence of the Finnish state. Rhetorically, we are already at war. All right, this is an old paper from the old Soviet invasion winter war. Andrei Klimov, deputy chairman of the Foreign Affairs Committee of the Upper House of the Russian Parliament. Finland has become a pseudo-state that is still searching for itself, as happened to Ukraine. Political scientist Oleg Glazunov, Finland has become a real military threat to Russia. Finland has actually been fighting against Russia all the time, ever since it was given independence in 1917. Military expert Yuri Knutov. Finland dreams of a greater Finland that would unite the Finno-Ugric peoples on both sides of the Gulf of Finland and East Karelia. Political scientist Vadim Trukachev. Finland is not so much on the path of Ukraine, but rather Finland threatens to become the fourth Baltic state. Many Finns are already dreaming of returning Viborg. European expert at the Russian Foreign Ministry, Vladislav Maslenikov, Finland and Sweden have only brought problems upon themselves with NATO membership. Finland and Sweden are no longer independent in their foreign policy decision-making and have no authority in the world. And of course, I talked about this yesterday. an institution that was completely destroyed propagandistically on Twitter in 2022, now is quoting drunken Dima Medvedev: "The Finnish establishment mustn't forget confrontation with Russia can lead to collapse of Finnish statehood, this time forever. Unlike in 1944, no one will go soft on them this time." Now, I want to just say one thing, and I'm not going to drone on about this, but if you guys haven't heard of Paul Warburg's channel, Paul Warburg, I think he's actually related to the old Warburg banking family. Seems like a really nice guy. Just had a baby that was born prematurely. Seems like a really nice guy. What everyone missed about Russia's attack on Poland, basically, I think, and I think I agree with him. He's saying what's not getting a lot of play is the reason that we could be seeing, the extra attacks of drones, which clearly aren't a mistake. Trump said it was a mistake. This type of rhetoric against Finland, we get it by the I could show you mountains of Baltic stuff. I'm not even going to do that. But the reason that the attacks are so violent, rhetorically and with the drones now against NATO, is because Russia is doing everything they can to win the war in Ukraine, which they're I'm not going to say they're losing, but they're just so poorly doing as a former great power, right? I could show you a map of around Pokrovsk. This was supposed to be taken already a year ago. It's not been taken yet. Might be. It's a full war zone. City's destroyed, but he goes on to give all the reasons, but basically I do agree with this point, is they're doing so poor. And the West is united, except for a lot of, some certain rhetoric from America. But they're doing so poor, they can't take Pokrovsk even in a year. Ukraine is doing such a good job defending their homeland that this is fully opening up now the fourth estate, or whatever you call it, I don't know, the fifth column, that they want Europeans to be so scared of them like they were in the old days that they stop supporting Ukraine even just a little bit. So we're going to bomb you, even though it would be disastrous for them right now to open up a war against NATO proper, they want to make every German, Swede, France, especially directed at Western Europe too, they want to make them so afraid of their own territories that they stop supporting Ukraine. And unfortunately, there's only one country in NATO which seems to be going along with this path. At the top, it's my own. It's very sad, but that's where we are. So I'd recommend this video as far as and just a good follow, good channel. Of course, this one as well, Anders Puck Nielsen. There's a lot of rhetoric that's coming on really, really strong, and they love dividing us. It's just what they love to do. I know it's good fodder to talk about, the CIA's exploits and everything else, but really on a government level or on a human level, speaking as an American, I've never witnessed an American saying that they don't want even the best for the people of Venezuela or something. I mean, it's not what we would say. It's not what we would do. Where was that part of the speech? Here. So this is what scares me the most, I guess, about the current situation. What did you think? It's great. It's a great movie. Great. Well, read the books, by the way, by Jürgen. You can read the or listen to the not just Commanding Heights, but all of his stuff. This is a very talented geopolitical historian. This is the author of Commanding Heights, and also just a lot of other good books. Where's his bibliography? So here's Commanding Heights. He's very good on oil too. So this one is probably like the best. No, not this one. This is old. This one. Energy security in the remaking of the modern world. And then he's also got sort of this one from 2020. But this one's really deep dive with really interesting oil stories. I'd recommend him as an author. Yeah, it's great. It's a great doc. That's good enough. You don't have to watch the doc and read the book, but other books by him I'd say were good. Also wonderful. It's like, how are we forgetting this stuff? I mean, I can disagree with plenty of things that Bernie Sanders says, but at least Bernie Sanders doesn't want totalitarianism. You know, Bernie Sanders may have really bad socialist policies, but he doesn't want totalitarianism to come to the U.S. The rule of law, he doesn't want that to not be in effect. Have to have some humanity. You know, I didn't agree with everything Charlie Kirk said. Far from it. Whenever he would talk about Russia, but to silence a man for speaking his mind, this is serious disconnect that the U.S. is facing right now. Yep. Or said economically, this is a crappy Gemini summary, but Hayek on the planning board will always fail. Dispersed knowledge, dynamic and implicit information, price mechanism as a communication system. All fails on a planning board. You guys know the Russian term that they used to try to act like what they were doing is not real totalitarianism? They call it sovereign capitalism. Sovereign capitalism. Has a good ring to it. Seems powerful. But this is what they will. This is the excuse that they gave to, to take Khodorkovsky's Yukos, turn it into Rosneft, and then float Rosneft shares on the British Stock Exchange, LSE. I mean, for 20 years, we just let them. They did not believe in the rule of law. But they acted like they did. It's a quagmire over there. Guys, I'm out next week. I don't. Similar Gulag Archipelago stuff. It's also one thing, again, I mean, just you imagine trying to be a normal student when this madness was going on. Well, these guys think they could just take every other people's stuff and start a society up. No, they won't. It's a very difficult question. Goes back to our soldier talk. It's different studies here. There's one I can't think of the one study I'm thinking of, but it might be this one. This is from 2013. Why do poor countries suffer costly conflict? It's talking about basically, I think there's a number, it's like 35K per capita, probably inflation adjusted, which is what the Baltics are at right now, where typically you don't have a civil war. Of course, rich countries, particularly the United States in recent decades, has engaged in plenty of international wars. But local, deadly civil wars, and there's a lot of people that want to call what's happening in Ukraine a civil war, but it's not how the Ukrainians look at it. Generally don't happen when you're above like 35K. I think the number is 35K GDP per capita. Russia's GDP per capita is 15K. Ukraine's is 5. So there's a lot to be said about getting rich. Would help all of us. Just being capitalistic, not being socialistic. There's a lot to be said there. And although I'm not a military man, there's a lot of people that don't want to fight, myself would be included. But I also don't want to not help someone that's fighting for their existence. And I would hope other people would help as well, because obviously, as you guys know, I'm worried that we're about to be in the same boat as the Finns. I mean, we are in the same. We're suffering all this rhetoric. Even though, as Warburg says, I think this is simply to protect their ass right now, because they can't even. Took them a year. They still haven't gotten Pokrovsk. But again, at what cost? At what cost? It's terrible. This is a heroic war that Finland fought. And it's very hard to prove negatives, but it is true that Stalin basically said, okay, we want your land, give us your land. The Finns said no. And after the war was done, the Finns still lost more land than Stalin requested. And they lost however many hundreds of thousands of soldiers. So I'm not saying like war is the answer, or war is certainly what I want. But are we just going to keep appeasing dictators on the other hand? It's terribly dangerous times. So the Winter War started right up after, Poland was invaded, occupied the Soviets' time for 1939 and early 1940. Oh, 70,000 casualties, actually, only. So not hundreds of thousands, tens of thousands. Again, not trying to make anybody sound like a statistic, but 70,000 casualties for the Finns, 321,000. And this might, what was dead? Okay, dead is 25,000. This is actually fairly modern numbers, probably, compared to Ukraine even. It's a terrible thing. Another option, which I've heard a lot about, is if these attacks, drone attacks, keep coming, then NATO just needs to not go full what's the word? To close the skies. No fly zone. No fly zone. So no fly zone is an act of war, basically, if one power declares it and another power breaks it. The power that declares the no-fly zone is saying, we will shoot your plane down if you break it. Ukraine has wanted this from day one. We haven't given it to them. An option, though, is because we have air superiority. We don't have drone superiority, probably. I don't know if we do. Maybe we do. I know everybody's working on this, but one option is, since we're getting more and more incursions, as they're calling it, basically attacks into NATO airspace, is you start to slowly move that no-fly zone outside of our borders, NATO borders. That would be into Ukraine, like into Western Ukraine. It could be into Belarus, which is here. It's dangerous, but it potentially protects soldiers on the ground. So if we see missiles, drones, anything coming within even, say, 200 kilometers of our border, it's going to be shot down from our borders. That's an option. That's certainly, all this is discussed. I'm not like a military strategist, as you guys know. but this is what I'm reading. They only have one what? Maybe it's time in future videos to lay off the macro, because you see it just keeps going up and up and up. But maybe show some fiscal deficit stuff of like U.S. versus Russia, both in big negatives right now. Oh, yeah, sure. And even after changing the one-child policy like 10 years ago, it didn't help them much, as I understand. I know for those that aren't too keen to the region, but I think most of you guys know what I care about. I've already addressed it a little bit this show, but for the American argument, which somehow is aligning with the Russian argument that we pushed NATO onto Russia, you need to ask which of these countries started wars in the 20th century with each other. You have to maybe go back to World War I for Serbia and Austria. Poland and Lithuania had a skirmish after World War I. But Russia's a gigantic country. Why does it need to invade these countries, which are ethnically different? Ethnically different. It's wild. They just won't go back and support their own society. I actually have different. I'm hearing different things with Poland. I mean, as you guys know, Poland was suffered like tremendously during World War II, and they are not willing to go in. Poland wants to continue being Poland and defend themselves. They're doing everything they can to supply Ukraine, right? Basically, every single piece of equipment goes from Poland to through Lviv, but they are, they just don't want anybody attacking them, and they are worried that putting troops into Ukraine will jeopardize that. Very cautious. I think it was Ukraine that blew the pipeline. I don't think it was the U.S. I mean, Ukraine's the one at war. Biden was quite a timid character. Um, I sent this on the channel before, but I'll show the article. It's also very interesting that this article, by the way, came out. Schließen. What is Schließen again? How do I reject all this? Reject. I hate all this GDPR stuff. Hold on. Sorry. Hold on. Gosh darn it. I hate consenting to these things. Are you kidding me? You can read this article. This is from August 2023. It's German, Der Spiegel. And it was very interesting play of European, particularly German, versus American sort of revelations on this topic. So as you guys remember, this was like February. No, sorry, this was like a year before this, right? It's like October maybe 2022 when the pipeline went, or September. So it took a year. Der Spiegel already put this out. And then what was very interesting is it took a whole nother year, maybe even longer, until the U.S. started to suggest that it could have been Ukraine. Again, I'm not, for the Germans on here, I'm not defending your right to be bombed, but Ukraine is at war, and a lot of people have said that that pipeline shouldn't have been built in the first place. There's famous I've shown this before. Sorry, too many pauses here for you guys. Too much dead time, but there's cartoons from like the 70s where, a German and a French are looking to a gas pipe, and they say, I don't see what the problem is, and the gas pipe is going into a Russian tank. That was a big problem. So Ukraine blew it. They knew that was. I'm not saying they did. Allegedly, according to here, allegedly they did. I could understand if they did because they're at war. But this is Ukraine has never spoken about it. I don't think Germany has made any sort of a resolution. In any event, it was very interesting to me that it didn't filter through the U.S. media for like a year after. And it's not like this is written in German either. So it shows you how tight-lipped government puts on, mainstream media when something is like seriously, when we're talking war. Also probably makes people lose faith in the mainstream media. But in any event, it's not. I don't think the evidence points to the U.S. But again, they're at war, and I don't know anything more than's written in these articles. Good morning, BCC Moon Guy. Yes, you have to rewatch from the start. Good afternoon, good evening, Tim. This is already in the plans for sure. Everybody knows it. Again, this is one of these quagmire regions that no one in their right mind would ever believe that rightfully belonged to Russia. This is a German, Prussian headquarter area that, yes, was far away from German sort of mainland, but Germans loved to holiday up here. Even all the way up in the coast here, Estonia and Latvia, they were basically, running the place most of the time for hundreds of years. The Russians made them all leave, raped 2 million German women after World War II, and made them go on foot back to Germany and took it over. So, and of course, it's a shithole now. Like, it's been an absolute shithole, like, not kept up. It was just a dumpster fire of, I don't know, military and nuclear waste and stuff during the Cold War. Anyway, this is undoubtedly in the plans. If, like, it's not defense anymore, it's going to be offense. Like, if it's not like 20 drones, which was what happened to Poland, all over Poland, if it's not 20 drones, but if it's hundreds or 1,000 or swarm, offense will start. So that means air superiority coming across from Denmark, Norway, Sweden, Finland, bombing the hell out of Kaliningrad and pushing everybody back to Belarus and through Russia as well. It's not defense. It's not just let them sit and come in like we let them do to Ukraine. Russia also knows this, so it doesn't posture too much. But they know that the plan is offense. That's why Gotland is so important, because it's this cannot be taken by the Russians. It's a super important. So it's not defense if they go into the Baltics or in Poland. It's offense immediately. Back to banking. Well, very quickly, at the moment, the reason it doesn't, just using the U.S. money supply. Let's take just demand deposits, the sacred demand deposit. No, here's demand deposits. Here are bank reserves. The reason it was so small during this time, this is your typical 10 to 1. See, it's 10 to 1 basically, your 10 to 1 ratio, is because bank reserves that were literally printed ex nihilo by the Fed to buy U.S. Treasury securities, they don't pay any interest. That was by design in the central banking system. It's like, this is something precious. You hold it. It's an account with us, even though we just made it up. It's very precious. You should want to have it, but you don't want to hog it because you're going to miss out on interest that you could lend on with fractional reserve banking. And they also usually do different ratios. Sometimes it's 10%. The U.S. actually had many different ratios. It's 10% for the large banks. It's like 3% for the country banks, and I think or the city banks, and it was back in the day, it was even 0% for country banks. The reason it exploded here and has not been lent out to infinity, like you say, is because the Fed also pays interest on this now. So they switched. They knew that if they bailed everybody out, which you see here, they knew that if they bailed everybody out, but then let the banks lend out at those 10 to 1 ratios, you'd had hyperinflation to infinity. Maybe a crack up boom, lost in confidence in the economy. So they had tried to have their cake and eat it too. They let all this bad debt, which was mostly here, by the way, in the repos, money market funds, they let it collapse but then they shifted it to the bank's balance sheet as an asset. But then they said, don't lend out too much, so we'll pay you interest. And for that, you'd have to look at financial statements like, how much the Fed pays in interest and stuff. They've actually started to lose money on that program. Ben Bernanke used to say they never lost a cent on open market operations, but they've started to lose money somewhere here. I don't know. So it's not like they know exactly what they're doing all the time. Probably most of the time they don't, as most Bitcoiners think. So that's the quick reason, is now they pay interest on these reserves. So these reserves are not lent out. So now we have this weird, like, massive bailout money as an asset for banks, and then, the regular money supply also growing a lot. Oh, yeah, I see what you're saying. Of course, I don't know either. And I imagine the Germans are not happy with the United States strong arming of their energy policy. But this is Europe's problem, right? I mean, it's not like every European wants cheap energy. Cheapest place to get it was Russia, even though we had the example of them always weaponizing their energy. I'm not going to say Europeans are treating, I'm not going to say Americans are treating Europeans well with that stuff. Yep. Also true. I was saying at the top of the stream, this is very slow moving as far as slowly updating money supply, right? I just got the data yesterday to make this chart today. So it's not a crisis predictor. It's just sort of to show you how wacky things can get. But also not growing that fast. So base money is already well under trend. And broad money, United States, this M3 money supply, right, doing a trend line, is well under the all-time trend back to the 60s. All right, see that? But it is over the trend from 2008. So make of that what you will. This solid black line grows at 7.7% per year. The dotted black line grows at 5.5% per year. I can guarantee you, over the long term, this money supply will go up. And I don't want to bother you guys with newsletters and subscriptions and logins, nor myself, frankly. So that's why I stick with the videos. Started to say, I'm going to be back stateside next week. My daughter is going to see her grandparents. So no streams for me. I'm not going to have this setup, unfortunately. Appreciate the poems, though, guys. I really do. Hope they've been helping you. We have to stay positive. I'm a proud European Westerner, if not a jaded American as well. I know it's sad days for a lot of people. I will. We'll do that next time. I haven't read it to full detail. Can you give me the gist? It's not true that they can't print forever. They can. It is true that it gets very bumpy, unsustainable, crashes, wars. I agree with that very much. But they can print. As my buddy Marty wrote, whoops, this is a bad, bad, bad trajectory. And it's hardly surprising, by the way. On the positive news, we're going up $100 a day. We're above trend. Here we go. This is the last time I refreshed it, which was already like 2 hours ago, so I don't know the price of corn just now. Oh, it was about this price. Again, feel very bullish, feel very confident when this line is, when the price is above the black line. Doesn't mean it can't fall down to those lower levels, but it's just super solid trend. And I stand by my stance, my conviction. Not that there will necessarily be a blow off top by year end, but I'm not going to call that there won't be until next year. Yeah, I mean, I don't know. I'd have to read more about it. It doesn't necessarily seem that the tech pressure would be necessarily a problem. It's just something that generally they do anyway. But I get what you're saying. In the propaganda between price inflation and price deflation, the central bank will always claim that deflation is actually one of the riskiest, which of course is nonsense. But as they choose to go inflation, it does mean generally, we need more and more money printing for the same amount of goods. Ready to moon? Oh yeah, for sure. In BTC terms, it will become cheaper, but I thought you were just saying if the tech sector or making certain things cheaper would mean they would have to paper over the risk of that price deflation, which I can understand because, you know, there's, as things get cheaper, the worry is that uh, the debt won't be able to be paid back. But in a free economy, that's not a worry at all because you can have your revenues go down, but also your expenses will go down, and you can still have a growing profit. They just err on the side of money printing, for sure. For sure. Always interesting comments, Gio. So you think they're going to snap up? You think the risk is too many people sell somewhere here, then they snap it up and price never returns? Total possibility, by the way. I need to work this chart out myself. Yeah. No, I think the theory is probably going to turn out correctly. But as I said before, with the free banking stuff, you do not need any of that. You don't. You can still have, even without Bitcoin, you could have a free banking system that would work with gently falling prices. If a bank tried to rip you off by issuing too many tickets against, you know, not enough gold in its vaults, the other banks would just claim those tickets and go get the gold and bankrupt the bank. So, and that happened in free banking systems before. But we don't have that system now. We have a fiat inflating monopoly system. Right. So they just move it slowly. That's a totally legitimate theory, I think. Yeah. And maybe we have it. Look, that we might have it. It's another good example of what could happen, by the way, is they want, where's my damn percentile bands? Here we go. You're totally right that they realized it's here to stay. It's being regulated, legislated. Everybody's trying to get a piece of it. So we're going to make it look boring and we stay on a trend. In which case, I would recommend hodling forever because I guarantee you it's not going to be easy. I agree with that. It was never easy. It's always hard to sell Bitcoin. If you think going over the number 9 here is like a good time and you're going to be able to buy back cheaper, that might not happen. So I would have a plan if you do plan on exiting a little bit during a boom by the end of the year. Yeah. Yeah. Which is why I need to get more of the volume up. But still, I need to get a flow volume versus Here we have, I haven't updated this chart in a while, but Bitcoin spot is still a big portion of the total. This is a month old, right? You got all the ETFs in here. This is volume, not flow of funds, but this is volume. I need to update this, obviously. It's a little bit more annoying. MicroStrategies in here. Miners. These aren't all of them, like the big ones. And then spot. Spot's still big. Yeah. I just cannot imagine panicking right now at this price. We're literally on trend. Sorry. Literally right on trend and even pulling this line up. I will. I need to get Giovanni on the show again, on the pod. But I'm going to go to their to this alpha conference. What? No, I haven't seen it. I wait for you to provide me, you guys to provide me the good info. Yeah, he's fantastic. I can show you a picture of hash rate to price. I look at them with the market cap. Remember, hash rate always goes stronger than the market cap. Why is that not working? For those that are waiting for the charts online, this is why I have to keep resetting them sometimes. Because it takes time. Why is this trend line not going? Anyway, I'll just show you really quick. I'm getting a pound number on the all-time trend, which I don't know why, but again, reasons why I have to keep doing these charts, double check them every day. So this is market cap per hash. As you see, it's a downward trajectory, so hash rate grows faster than market cap. But those times when market cap pumps, potential bubbles, right? So pumped here. And it's also interesting that this called the tops, right? So here's 2021, all the way through November. This was kind of an interesting, this is different than the PSR metric, which I'll show in a second. And here we're really hot. I mean, relative to the trend, we're super hot. But stable, you know? So I don't necessarily think this is calling like a top or anything, but still might not be a perfect indicator, right? And remember my PSR, price to sales ratio. We'll show that now. Let me go 90th percentile and up, because I think we're below the 80th. Yeah, I mean, I agree with you, Gio, but I still go back to, say, this chart. No. Damn it. This chart, assets, liabilities. Yes, it's super small. Yes, they can control it, but also that, the market's got its own capital games to play. Bitcoin's super small. So maybe if you go, no, I'm just getting too many charts here. If you look at it this way, Bitcoin versus all central bank money, it's still only, less than 10%. If you add gold on here, it's less than 5%. Here's gold separately. You could add them as well. I still think this power curve is 90+% of the movement of Bitcoin. I think it's going to do what it does. Yes, they're going to try to manipulate. Yes, they're going to try to do this and that. But they do that with everything else. They do it with gold. They do that with stocks. I don't think Bitcoin is unique in the manipulation. That's my only point. But this movement is pretty interesting. It's pretty unique, this power curve movement. But I understand what you're saying. Yeah, I know. That's all right. Fine with it. Better to be under the radar, right? Okay. Here we go. Price to sales. I'm going to take off the price. This is the ratio in gray. This is never happening again. Here's the super hot ranges. All right, get into this rainbow. It's super hot price if it gets to this range. We hit the 90th here. But notice, interestingly, here, as opposed to the hash rate chart I just showed you, hash rate stayed above. I have to start deleting charts because I can't even remember what I have here. And where is it? There it is. Notice how in 2021, the market cap per hash stayed elevated above the 90th percentile the whole time. It's very interesting. The whole year. But if you look at the market cap divided by the miner revenue, which is like 15 billion at the moment, topped out at 20 billion in 2021, it only signaled the top during the first boom. And then the second boom sort of showed you might want to really be careful here because we're out of the range. Then we do it again, and we're still, this is not in the rainbow. This is just price on the different axis. The rainbow should be applied to this multiple. So we're still way out of, I believe we're in the 80th percentile. If not between the 80th and the 70th, if you looked at, so we got, again, plenty of room to run. Doesn't worry me. Doesn't make me think I need to trade in and out of Bitcoin or whatever. Thank you, RV. Here's what I should do. I need to run this chart, but look at global assets. And how would I calculate global assets? I'd use this thing, global balance sheet. You don't actually see total assets here because it's just, my software doesn't work that great for that, but because I would extend the number up. These are stacked values, but the number is 450 trillion. Add either the negatives or the positives. So do I even have the, I got it here. It's 447 at the moment. My calculation, global balance sheet, $450 trillion. Let's just take that as a number, run a exponential curve, and see how long it will take Bitcoin to catch. Bitcoin will reach 500 trillion in December 2050. But that also means that the global balance sheet is already growing at, whatever, 7% per year, doubling every 10 years. So it would have doubled here to a quadrillion. After another 10 years, it's going to be 2 quadrillion. Follow my math? And after another 10 years, it's going to be $4 quadrillion, 4,000 trillion. Bitcoin will get to 1. So we get to 25% of the global wealth, global balance sheet in 30 years. I'll put this on a chart so we can look at it. It's going to take time. Past the U.S. Treasury market already by 2041 at $108 trillion. I think it's called gold. I think. This is the weird thing about the power curve, though, right? Even if we're at $1 million Bitcoin, $1 million Bitcoin, which is here. I don't know why this goes down to 2 decimals. I need to change that, but $5 million Bitcoin, which is here. At some point, we're on a Bitcoin standard. How do we take more and more debt on limited amount of Satoshis? So I think it's actually possible that Bitcoin stops being a curve like this and starts being a curve like this, a straight line on log scale, which, like I said, is less exciting for Bitcoin because that means it's probably just plugged into the current system. We're doing fiat interest on top of collateralized Bitcoin. That's not very interesting. one knows the future, right? Are you a TA trader, Geo? Or are you referring to the power curve itself as resistance? Because that is the resistance. I guess if I did the more, TA stuff, like what would have predicted the explosion right there? Okay, well, that was the election, actually, so that was what did it. But, are there TA numbers to pick the jump there? I don't know. Or the fall down here to 76K. So they're saying 113 is the resistance, which it is interesting. That is exactly the power curve. But as you know, I'm not a trader. So I can't tell you more than the math. What's fun, the most fun one with the power curve in my view was here. And no one was looking at it like in the world. Maybe Giovanni. Like I said, I started here with my posts. But if you drew the power curve at the time, through the data at the time, it fell at the curve. The curve didn't look like this at the time. It was here. It's more like 6,200. I have a chart of this I can show you. Hold on. Anybody else worried about the Russian threat in Europe? Any Europeans? Or do you think it's going to be like Warburg here and they're just trying to do everything they can to make you scared without really doing anything because they can't even take Pokrovsk? So if we look at the power trend until 2016, it's not going to be good enough, actually. Yeah, it's higher. It's actually not good enough. Hold on. I need to put... Okay, I have 2018. How does it look? Yeah, there it is. There it is. So it didn't catch it. This is the trend until 2018. Didn't catch it right on, but it was so this is the trend now. This is the trend at the year December 2018 and stopped calculating. Okay, so it was calculating all the way through here and then it stopped like here. But it's pretty interesting that it didn't catch it exactly, but you broke through this power trend, which no one knew at the time, like I said, except maybe Giovanni. I was actually working on the chart, but I was obviously not trading or understood it enough. I don't know when I started to calculate it, but I started to do the base money stuff right around here. Anyway, you see that this support became resistance. Quite interesting. Like it really exploded once it fell under. Or exploded is the wrong word. It got demolished. And then if you do say the 2021 trend, this is why the power trend's so amazing. This is a few years later. Also had a huge drop off here. So it can be pretty strong support as it goes on. And now it's been pulled down, right? This is also important to see. So 2018 trend is the higher line, 2021 trend is the lower, and now this is the all-time. It does get pulled as time goes on, but it's not the lowest it's ever been. As I've showed you guys before, the lowest it's ever been was somewhere like here. I'm not drawing it. 2016 is very close. I think it's higher now. It would be earlier in 2016. Yeah, look at that. That's almost identical. The 2016 trend to you're $8 off. It's unbelievable. That is an unbelievable sight. I don't know if you guys see what's happening here, but this is the 2016 trend line versus the all-time trend line, which has 9 more years worth of data. That's just insane. So there are many arguments to be made that this is like the core ordinary least squares best fit for Bitcoin's value. But it's actually not the lowest. The lowest, which is somewhere back in 2016, would project, as I've told you guys, $105,000 Bitcoin trend line, not 113,000, which is doing right now. So that's good news. We're not the lowest, and as we get above again, we'll pull this back up to more fun future values. $2010 we're never coming back to, unfortunately. It's the 2010 trend line. It's a great one. $6 billion Bitcoin. Who is it that told me that Bitcoin was going to be $1 billion? Was that Ansi yesterday? Let me find the chart. I can't find anything anymore. I know. I'm sorry. Where's this damn chart? It's here. It's here. Someone projected $1 billion in like 2035, I think. It's not happening. Yeah. Someone did this, like BlackRock or someone crazy. There's no way $1 billion is Fidelity. Thank you, Gio. Thank you. The only way that happens is if Bitcoin moves back to an exponential curve, which could happen. In my opinion, that's not a... that's great for your bottom line. It's less great for freedom. We don't want exponential trends because they're unsustainable. We want power trends. So you can see the difference there. 2016 power trend versus the all-time power trend, $1.7 million Bitcoin versus $1.7 billion Bitcoin by 2025. 2035, by 2035. You can see the power of exponential growth. Right, but if it does that, and continues on it on this green line, then you have to have fiat interest to pay. You can't do sats interest. Doesn't work. It will collapse. And fiat interest doesn't sound that exciting to me. Again, it's great. Like I said, it's great for Bitcoiners' bottom line to do it that way, but it's not. That's not the currency of peace. More fighting, more wars, more interest. So this is another thing about the power trend, which is nice. It's a sustainable, beautiful trend, but you do have lower and lower trailing 12-month returns. So by the way, you got to go till 2070, which I didn't do here for some reason on this. Oh no, I did. You got to go through 2070 before you hit 10%. Okay. Still a great Bitcoin price return, $200 million Bitcoin. And this is academic, by the way. The question to ask is what happens when the exponential system meets the Bitcoin power system? Is Bitcoin going to win, or is Bitcoin going to turn the exponential system power, or is Bitcoin going to be pulled into exponential by the TradFi exponential system? I don't. Okay. I'll check it out. I'm pretty sure that still there's not many people. There's not many people that are even addressing what I'm saying right now. It's just the power law people. And I don't even know if they've fully wrapped their head around precisely what I'm saying. There will be a crossing here. It makes perfect sense to me if we're going to start loaning out Bitcoin that you actually better bank on something less than compound growth as a return. Otherwise, just hold your Bitcoin. If it's too risky for you, don't lend the Bitcoin. But if you're going to lend the Bitcoin, you know, there are going to be fewer and fewer Satoshis each year that are coming into the system and thus can be used to pay interest on your loans. That's the big question. Thank you, Teets. Appreciate it. When does he say that happens? $2 quadrillion. I'd be curious about his dates. Good morning, Ansi. Or good afternoon at this point. Thank you. Back to the market cap projection here. And if I put this here, unit of account revolution, 2 quadrillion is, so here's 1 quadrillion, million billion. There's 2 quadrillion, 2 million billion, 2062. Well, we agree, I guess. If he's putting those numbers, again, I don't know why he would put 2 quadrillion as the number. I think it'll be much faster because, like, we passed base money in 2040. Treasury is the same because a lot of treasuries back base money. Oh, that's a coincidence. They're almost exactly the same. So I think you only got to get to 100 trillion to really see sparks fly. Just personally. But that's interesting, Gio. Thank you, as always. I'm waiting on my coffee. Is that what it's called? Bitcoin as an exponential asset. So then we're on completely different trajectories. Whatever he did is different than what I'm doing, and I don't even understand it, frankly, because here is Bitcoin itself as a price. As a price, we can get probably to 2 quadrillion faster. Yeah, this is, I know. This is price of Bitcoin, yeah, per one Bitcoin, not market cap. On exponential, we can already get there in 2034. To 1 billion. 7 billion, probably pretty soon after. 2037. See, these people aren't running the numbers right. Send him an email. I'm too lazy. But if Bitcoin is an exponential asset and he thinks price will be 7 to 14 billion midterm, I can already get to 7 billion in his short term, 5 to 10 years. Just look at the numbers. If we go exponential. There it is. 7 billion. The year 2037, that's only 12 years away. That's pretty much 5 to 10 years. I'll try. I'll try. I need your guys' help to keep. This is good that you keep telling me other stuff. I need to focus on my stuff, but I will try. Thank you, sir. This is also true. Yeah, I'm sure he sees it that way. If this is what he wrote, again, I'd have problem with that phrasing. Every asset is not linear; it's exponential. This is wrong, Gio. I'll watch it. This is wrong. I can already tell you this is wrong. There is no linear asset. Gold. Here, let me show you. I've told you guys 1,000 times. You know how it is. There's treasuries, base money, gold, Apple, which is actually super fast and probably way too fast. These are all straight lines on log scale. Straight lines on log scale. That means they're exponential. So when he says unlike linear asset, there are no linear assets. So this is I'd quarrel with that phrasing. Every single asset in the financial world is not linear. It's exponential because of compound interest. Those are all buzzwords, but you know, as you know. No problem. First of all, I can get all the way up to M3. I can actually get up to the globe balance sheet, including debt, but the data is there. Of course, it's massively, I'm sure, massively rounded in things, but you got to go to the central bank. The central bank they do know the money supply. It's the one thing that they know. They publish them. It's not like a secret, except for USM3. USM3 is a secret. So you have to I talked about this a few times already on the stream, but you have to go through other things on the Federal Reserve's website to find it. This is This is a good point. Ask him if he wants to come on. I'll stream with him. He can explain exactly what it means when he says unlike linear assets and explain what a linear asset is. Good morning. So yeah, no, it's there. As I've said here, though, many times with the dollar, which this is the largest money supply in the world, this is the world's reserve currency. This is even higher than what the real money supply is even higher because there's one crucial component that I do not have yet, and that's called the euro dollar. Jeff Snyder likes to talk about that. It's basically foreign dollar-based accounts. So dollars that you would hold in like Societe Generale in Paris or something. The Federal Reserve used to give a number. It was like $1 trillion all the way back here. It's your guess is as good as mine. It's probably tens of trillions of dollars. So euro dollars could at least add probably another 10 trillion to this money supply. It shows you something. I really work hard to get these together, but it's I just don't have euro dollars yet. It's very difficult. No problem. Ah, I thought you were reading from his thesis. I thought you were reading from his thesis. Yeah, it's huge. And then you can sort of back into total. This is that Jesse Myers sort of a meme, total wealth, which really we got to be careful. They're assets and liabilities. You can't double count them. But you look at just the debt and the equity side, it looks like this. So liabilities are negative 450 trillion. True. This is more fun, man. Skip the job today. It's Friday. Thank you for your contributions, Gio. Have a good weekend. You as well. Have a great weekend. Always insightful. Thanks for the poem. It's a long one today. I'm going to do a long one today, guys, before I head off next week. But like I said, next week I'm going to be in the U.S. Scary days, I know. Very sad days. What? You got to explain that at some point. I really like reading the poems with you guys. We got to keep cool heads while social media melts down and makes us fight more. And this is a great quote from old Charlie Chaplin. We want to live by each other's happiness, not by each other's misery. I'm going to be honest here. I mean, I always try to be honest, but it seems to me that fear and hope and anxiety sell a lot of newsletters. I like to use the word newsletters because that's the cottage industry. But of course, as we know, the mainstream media does that as well. The world is going to keep moving, and sometimes we don't like it. We're going to keep creating more and more debt, more and more equity. It's unsustainable. In the long term, in the short term, it will keep going. Get ready for big crashes like here. This was a big one. 50%, $30 trillion of value evaporated, but then they papered it right back over. Of course, the dollar is worth less. It's better to have gold, better to have Bitcoin. But I'm unashamedly not in the business of selling fear to you all. Bitcoin is a great tool for freedom. It is scary. It is sad. You have the political violence. I feel very bad for Charlie Kirk's family. Kids growing up without a father. Serious stuff, guys. But there's a lot of fear. People like selling on fear, and I promise you I'm not going to try to do that here. I'm just going to try to show you the numbers. They keep getting bigger, more and more debt. Bitcoin's a very small percentage of this on the asset side. This is as of June. But by the way, so is gold. You know, gold is a 6,000-year asset, also moving exponentially. It's still only 20 trillion big. It's going to take time. Anyway, I don't want to rehash too much of the other stuff. If you want to check earlier, for those that have joined, obviously you all know my position on real wars. Let's try to not call for wars with each other on social media. I know it's hysteria from major important people. Super sad. But I can at least tell you in Eastern Europe what we're focused on, and it's a real war. Not starting a civil war, but a real war that now the Russians are pushing towards everybody in Eastern Europe. So that's what I'm thinking about. I'm going to be gone next week, but I'll come back after that. Midweek after that. Okay, so I'll be gone for a little bit. Everybody have a great September. Really appreciate chatting with you guys and you keeping me sane while I talk to myself. Check out this video from Paul Warburg if you want to talk about the attacks on Poland. Kiss your family. Say you love your family. Let's try to be positive. And if you feel too negative about the system, buy Bitcoin. Yes, it is. Thank you, Kevin. Just signing off. If you feel down, let's keep talking, read some poems, and buy Bitcoin. All right, guys. I'm going to sign off. Thank you for being part of my community. And I'll be here with the charts in a week and a half. Take care, everybody.